What is going on, everyone? Welcome back to Neel K Trading, or Neel K Trades. Today we're going to have our fourth episode in the ICT blueprint, in my trading blueprint. This is how I trade. This is the, I want to say, final confluence that I use when trading. So this is going to be change in state of deliveries. I figured I would teach this before I go ahead and teach inverse fair value gaps. I really want you guys to truly understand fair value gaps, so I'm going to let that video sit for a day. I know a lot of people can see confusion with fair value gaps, so I've decided just to leave it. I'll teach inverses in the next video. Today it's going to be a bit more, I want to say, not as simple, but a lot more straightforward in my opinion. So let's not waste too much time, jump right into it. Oops. Alright, so when looking at my trades, you're going to see I have a lot of points marked out where I say CISD, or somewhere where you'll see I marked this out. Essentially what this is a change in the state of delivery. So this is one of ICT's concepts. Essentially what it is you'll have a leg up. So yeah, you see this down close candle, you'll have a leg up followed by a reversal, and all that reversal is when price closes below the candles that were made to make that leg up, changing the state of delivery. So while price may have looked bullish here, imagine you don't know these three candles are going to happen. Price may have looked bullish here, but if you keep watching, if price does close below the body of the candle that created that leg up, if you see it close below, that's going to be a good indication that you're moving lower. So you don't mark out the wick, you mark out the bottom of the body. Same way, if you're looking at it to the upside, you'll see a series of down close candles. So this is a very simple example. You'll see a series of down close candles followed by two candles that move higher. So in this case, you mark out the top of the body here. So this is the close of the candle, this is the open. You mark out the open of this red candle. If price ends up closing above that level, you can expect price to touch this area, fill orders, and move in its original direction, so back up. So starting with our first example here, I want to point your attention to these levels that I have here. If you look over here, as you can see, price makes a leg down, followed by a short leg up, moves even lower, takes out these previous lows that were created on this wick, and then it ultimately moves higher. So how are you going to mark out a change in state of delivery here? So like I said, we have the up close candle followed by a series of down close candles, and if we're looking for a reversal to the upside, we want to see price close above the leg that made the most recent lows. So in this case, you have this candle here and you have this candle here. So this candle here, before that was a green candle. So there's this green candle, then you get this red, followed by another red, and then a green. So these two candles that created that low right here, you're going to want to see price trade above here, this level. Let me mark it out, let me make it thick for you. You want to see price close above here in order for you to want to expect to move higher. So what ends up happening, price closes above, we come back down, price doesn't really trade too much lower than the change in state of delivery. As you can see, we did get the closure above. Price comes back down, fills more orders, and then eventually you'll see price shoots back up. You get this wick down, but price ultimately, where did it close? Way above here. So this we can say is a change in state of delivery, or a CISD, as I usually say in my videos. Now, moving on to the next example, I want to show you one where you can expect price to move lower. So in this case, we have these down close candles, followed by these up close candles. So if our general sentiment is that we're going to go lower, so say for example, you think that these highs right here are liquidity. If you think this is liquidity, any of these levels, as you can see, price doesn't touch it, but you can see the wicks here don't really they're not very strong. So anything above this level here, you can expect that to be taking out that high. So as you can see, price trades up, and if we want to go short, what do we want to see? We want to see the series of up close candles get closed below in order for us to expect a move down. So in this case, I want to see price close below here. So what ends up, let me make this thick again for you guys. So what ends up happening, you see price come up, trade sideways, you get this candle, you get this candle, and you get this candle closure. So ultimately, this level is where you're going to see the change in state of delivery. So let me write this down. So change in state of delivery occurred here. As you can see, price does move a bit lower. This is before, I believe this is before market open. I don't know if I'm on New York time or not. So just again, price moves down, comes back up, and what do we want to see? For us to, again, we saw this change in state of delivery. If you want to expect price to move lower, you're going to want to see it close the level where we had the series of up close candles. So price moved up, get this red candle, price moved up more, and we get this red candle here. So for us to want to go short here, we're going to want to see price close below this level. So what ends up happening, we get the closure, price makes a leg up here. Like I taught in the previous video, we do have a small fair value gap here. So price gets a change in state delivery, tags into this fair value gap, let me write that down, comes into this fair value gap, fills more orders, and what happens? Price dumps. So that is very textbook for change in state delivery. And this gave you a little example of how you can use fair value gaps in that. So if you get the change in state delivery, if you expect price to move lower, and you see these up close candles, see if there are any gaps you can go off of. So price, yeah, we got this huge premium wick here. Orders got filled, and immediately after that, we can see the dump. So that would have been a very nice trade. If you did want to enter this as a trade, what would I typically do? If we got the change in state delivery, had this fair value gap here in mind, I would have entered on the closure of that fair value gap. So once price had decided to have this failure here, I would have entered on the next candle right at the fair value gap. So right at the bottom here, setting stops at the swing high, so the most recent highs that were made. And what would I have targeted? I could have targeted these lows for 69 points, or I could have targeted pre-market lows. So typically if we're sweeping out highs, you're going to end up moving lower. And what ends up happening, this is the 3-minute time frame. Price delivers very, very quickly. So again, let me just quickly write this down. Get the change in state of delivery there. And price dumps. So that's just a little entry model that you could use. I have another entry model that I like to use a lot more in comparison to this. This does involve inverse fair value gaps, which I will teach in the next video. But regarding that, you could have targeted these lows here. So 50 points is equivalent to $1,000, just for a little note you guys can make. So 130 points, it's about 2,000 and I want to say $2,500. Yeah, so that good example here. Give you a little entry model. Now let's move to the next example. I want to go over one more example here about price moving upward. So as you can see here, this is pre-market session. I typically don't trade pre-market, but they're really good examples to use. So looking at it here, we have these lows. Yeah, I just want to mark out these lows. So I'm going to say this is sell side liquidity. I hope you guys have been reviewing what I've been teaching in these concepts. So just quickly, we have liquidity down here. And we have these highs right here. Just want to mark that out. Oh no. So before I start looking at any trade, any ideas, I want to see liquidity get swept first. So in this case, I want to point your attention to this area right here. So a lot of good examples here for change in state of deliveries. So as you can see here, price makes a massive leg down, and if you're wanting to go long here, you're going to want to see price close above that most recent candle that made that low. So if you want to go long, you want to see price really go above this level. But how many points away is that? That's too much. 72 points. The trade idea is gone. You're not going to see that for a while. So looking at these, as you can see, price comes down. We make a new leg up, and then price starts to come lower. For us to want to go short here, you're going to want to see price close below here. So what happens? We have no closure below here. We get these new series of down close candles. So what can you expect? We didn't get the changes to state of delivery to this downside. We took out some liquidity down here with this massive wick. What can you expect? Look at the series of down close candles. If you look at the most, like the start of the candle that caused that move up, what ends up happening? Price closes above it. As you can see, price does have a bit of trouble moving up, starts to come down a bit, then we move right back up. And again, for us to want to go short here, you're going to want to see price close below these three legs that created this high. And what ends up happening? Again, price does not end up closing below this level. Price, if wanted to go lower, it would have closed down below here, and you would have seen more liquidity get swept and a move back down lower. But that did not happen. So again, the bias for longs is still strong here. So what ends up happening, if you do take this change in state of delivery here, see price create this new leg down. What do you want to see happen? The most recent candles that created that initial low, you see price close above it. You can see orders get filled here, and again, price moves higher. So I get that this can be confusing initially. I really do understand that, but I think this is a sort of thing where you have to have more screen time to understand this. So again, really practice, really do your homework, really go over everything I teach in the videos. Change in state of deliveries aren't really too difficult to understand, but applying them while you're trading can have a bit of difficulty. So what I would do is really start marking them out, see what price does when it does do a change in state of delivery, and see what you can learn from it. So again, your best friend is looking at historical data. I always say price will always repeat itself. So if you really want to start with the hour time frame, go back as far as you want and just look for change in state of deliveries. So just to recap, change in state of delivery. So we have these series of up close candles. For us to want to go lower, we want to see these up close candles get closed below, so the bodies of them. So what does price do? Price moves lower, closes below it, and keeps continuing down lower. Again, here we want to see price, if we want to go long here, we want to see price close above this level, the most recent levels that created this leg down. Price closes above, we get the distribution up. So I know this video was a little bit longer than usual, but I really do think that it is important to know this and know how to look at how markets are moving before you start to learn about inverse fair value gaps and before I actually show you my whole model. So I do have one more video after this explaining inverse fair value gaps, and then after that I'll teach my actual model. All these videos that I've released thus far are part of what I trade. I'm not trying to teach you more, teach you less. I'm trying to teach you what you need, because the more you learn, you're going to get analysis paralysis. You're not going to be very locked in. You're going to get confused with everything there is to learn about trading. So I really do think that I am showing you what you need to know, and anything more you can learn on your own. I might even release videos on topics such as order blocks and other things, standard deviations. But for now, I'm just showing you what I typically use on a daily basis and what I have found success with. You want to keep it as simple as possible, otherwise, again, you're going to get analysis paralysis. So thank you guys so much for watching this video. If you do enjoy this type of content, please leave a like, subscribe, share with your friends, and as I always say, be patient, be humble. I'll see you guys in the next one.